Ladies and gentlemen, you've been connected to the Sonata Software Limited earnings conference call. Please stay connected. The call will begin shortly. Thank you, the Software Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shikhar Reddy, Managing Director and Chief Executive Officer, Sonata Software Limited. Thank you, and over to you, sir.
Yeah, thank you, Margaret, and good morning, everybody, and welcome to the analyst call post the announcement of our financial results FY20 yesterday. So we have our CFO, Jagan Chakravarti, Head of Finance, Satya, Head of Strategic Risk Management, Premnath Murthy, Chief Growth Officer, Ranganath Puranik, and our Chief Delivery Officer, P.S. and Raju, and Sujit Manti, the Head of our India and Asia business on the call. We announced the results yesterday and quite late in the evening, and they are out there on the website, and we sent out the press release to all of you. But before, I guess, started, obviously the last 2 months or so have been quite dramatic in terms of what has transpired. I'm sure that all of you have also been observing it, experiencing it, etc. First and foremost, it's been obviously a huge humanitarian crisis, and then it had a huge business impact. And when you hear the various experts talk about it, it's a health crisis combined with both a supply side crisis and a demand side crisis, and on top of it, a whole lot of dynamic government-imposed regulations on what can be done or not done. So it's been quite, unprecedented in terms of the speed and evolution of these events, and its impact it has had on ourselves and our ability to do business, and our customers, ability in their own issues, as I said, both demand side, supply side, and government-imposed restrictions kind of stuff. So obviously, we had to act early and we had to act quickly. The first and foremost issue was completely the safety of our people wherever they were in the world, and ensuring we put the right work environment and right rules and guidelines and all the other things which needed to be done to ensure that people did not take any risk in trying to do their work and get exposed to anything they should not be, kind of stuff. So that was priority really number one, and we dealt with that. I should say very actively. Happy to inform that there's nobody from the Sonata family who have been affected by this virus. The second was this whole thing which was driven by both from our customers and work regulations, lockdowns, etc., to be able to move work and do it from our respective homes, and the speed at which these regulations were brought in. Very happy to inform that over a matter of 2 or 3 days, the whole the Sonata team all over in India, it was easier to do in other parts of the world because the regulations were less severe. But at least in India, to move this thing and implement the work from home. Very happy to inform that today we have 100% of Sonata people, whatever function they are in, working from home, connected to the Sonata networks and able to deliver work. Also happy to inform that these people have been productive and been able to do different kinds of work, either it is sustenance work, project work, agile development work, ERP implementation work. A whole lot of different services have been delivered now over the last about 45 days by these teams. People have been able to put in different systems, processes, tools, methods to both collaborate with clients and collaborate internally to be able to deliver this work very effectively over the last 45 days. I'm very happy to report that and say that it's kudos to the whole Sonatian team who have been able to rise to the cause and been able to do this very effectively. Obviously, we have to form an emergency response team and to looking at various aspects of our business and what do we need to do given the situation which was unfolding, and obviously was there any clarity on how it is unfolding and where it's going to unfold to kind of stuff. So step number one was to really, as I said, protect our existing business. That is a business which was going to continue given the circumstances depending upon the industry in which the client was in, the nature of work, and so on and so forth. And so the whole initiative around reaching out to clients, ensuring communication was well done, ensuring communication about what we're doing to support the work was done, and if there were any other things which needs to be done in the short term to help and support them, offer those kind of facilities so that that could be done. So that was really step number one. Step number two was to do a serious analysis of the different businesses, the industries we are working on, and the kind of different projects we were doing, what are the likely impacts, and what's going to happen, and then prepare plans and act accordingly. As you know, I think from our experience, there have been different industries which have been affected very differently. Obviously, the worst hit has been the travel and hospitality industry, to which we have a very large exposure to. The second was the non-essential retail industry, whether people were in, fashion, jewelry, and so on and so forth. So the first and depending upon, where they were at, then their almost the business was coming down to zero. They just have cost and no revenue. That is the travel industry. So they would act a lot more severely and instantaneously. To retail was still were thinking, waiting for the things to open up, and still kept some very minimum essential services going so that they could still continue. Third were really manufacturing, were obviously hit by either supply side or demand side issues. The other industries where we're operating was the tech industry, which is, I think, at least some of the companies we're working with were less affected. And then there is the utilities industry, which we had with the acquisition of Surplus, not so much affected. And the industry which we got access to by the acquisition of Scalable, which is the agri business commodity, this thing, again, not affected. And there were some other companies, more than the mortgage processing and so on and so forth, not affected. So really, through these types of industries, and obviously within some of these industries, and that's the oil and gas sector, and within these there are obviously companies of different scale and size. People whose instant reaction was to protect and reduce their cost to as little as possible, depending on the industry they were in. And obviously there were some who had deep pockets, who were still looking at this as an opportunity to continue to do something, although the belief is that their industry was in the short term is negatively affected, but continue to at least invest in some of the strategic initiatives so that when the whole thing ends, they come out being competitive. So obviously there were different types of customers, different types of responses to this situation. And the others was really, how do we, obviously cash preservation, predominant preservation of cash, ensuring, some of the costs were automatically, reduced for travel and other related costs, and then there's some other costs related to work from home. And obviously, to look at also internally in terms of what are the kind of costs we don't need to incur as an organization. So there are a whole lot of analysis and implementation of that kind of stuff. So what are we seeing in the market? Obviously now, after the initial thing and the reaction to it, there are now people waking up and looking at it, differently. Most people are obviously still looking at what they can be done immediately with immediate ROI kind of investments rather than very long-term, investment which have an ROI period of 2 years, 3 years kind of stuff. So that's definitely something which we are seeing. So obviously you may be all keen in terms of what is the whole impact will be going forward, and we had made an announcement to the markets I think towards the end of March because I think we had this one single large client in the travel sector who was contributing between 15 to 20% of the revenues of the company, and they had to more or less suspend the majority of their operations. So we had to make the announcement to the market, which we did. And as I said, we've had some negatives and some positives depending upon the industry, and I think so we are seeing, as far as we can state about it, that some stability is emerging in terms of at least we believe that most of the bad news is behind us. But as I said, everybody guesses that this is what everybody else is, but this is what we are seeing. If you see that, and then based on what we had said, that we are looking at a revenue reduction of about 15 to 18% in the first 2 quarters, and we're still looking at the various cost implications. As still some of our people are stuck in different parts of the world and unable to come back because of the government regulations. So that's had an impact on the cost structure. So I think we should have a much better visibility on the cost structure. I think my feeling is our cost structure will be a little bit more than what was anticipated in this quarter. And we'll have a much better visibility and stability towards the end of Q1 in terms of a more realistic cost structure. In between, the top management and senior management of the company have taken a voluntary pay reduction, and we appreciate it also all the people. So we're putting all this together, and I said, based on this, in the first 1 or 2 quarters, at least definitely the first quarter, the cost structure would be a little bit higher because of these issues of people being stranded in different parts of the world, still paying them local salaries, unable to come back, and so on and so forth. So that's what the outlook looks like. Starting from the second half, it's as everybody says, that it's whatever it is, the kind of recovery, whether it's we or you, or we are rather estimating it to be more of a U than a we. So, or any other alphabet letter W, I really don't know. But if we have to model and we think that things come back to some reasonable normalcy, and we are modeling that at least 30 to 40% of the business we have lost should come back, then by Q4, and then we could look at about overall a 5 to 10% impact on our revenue and profit by then. But that's, as I said, it's everybody's guess as good as mine. But if that's the expectation, then this is what we're seeing as we sit today in terms of where we are. Similarly, we've had the same challenges with our domestic business. Also, the business is more stable because these are licenses which people need, they need to buy. Obviously, they're looking for more defined, but less reduction in the amount of licenses they want to consume, and so on and so forth. So the stability of the business is a lot better, obviously, although it's, as I said, shrink kind of stuff, and it's not a business where people can do all of this kind of thing. So that's, I think, the way we are seeing the domestic business quite well covered for credit exposure, either both through insurance and what kind of companies we are dealing with and the arrangements we are having with our principals to ensure that if there is pain, we both share it together rather than alone kind of stuff. So that's, I think, on the domestic business. In between, I think we've started this acquisition of GBW, and we announced it sometime in February. So we completed that acquisition last week or about 2-3 weeks ago, and so that we're integrating. Obviously, their business is also affected by this crisis, as a lot of the customers are in the retail quick service restaurants and so on and so forth. But the space we are in, customer experience, I think is really fast growing based on whatever little we have spoken about since the acquisition to different clients. There's a lot of interest. One has to see how we can translate that into opportunity and business. And because of, I think, some people like GBW, we have now fairly reasonable visibility of the world. I mean, we are definitely seeing, where GBW had business like China, Japan, Australia, where we need to have. So to that extent, I think we are geographically reasonably distributed, and we are seeing business coming down New Zealand and so on and so forth, business coming back to a little bit more normal than where we are. And of course, the western part of the world is a little slower, including India. So that, I guess, is a very high, qualitative view and a view of where we think we will be for the first 2 quarters. And following that, I'll hand it over to Jagan to take you through the financials for the quarter. This went by, and then at this stage, I think a very detailed analysis of the thing we need to still do to get everything correct, and because of the dynamic nature of various things which are happening. But I'll ask him to share that with you, and we'll take questions after that. Yeah, thank you.
Thank you, Kekar. Good morning, all. I will now give an update on the financial numbers for the quarter and for the whole year. For quarter, the consolidated numbers, Q4 financial year 19-20. Revenue stood at 928.7 crores. Sequentially, there was a degrowth of 24.9%. This is basically because of our India business, that revenue will be up and down in that business. The growth, there is a growth of around 11.1% on year-on-year basis. EBITDA for the year at consolidated level is rupees 95. For the quarter is 95.2 crores. Sequentially, this had a degrowth of about 19.5%, and year-on-year there was a degrowth of about 1.7%. The PAT for the quarter is 61.8 crores. Sequentially, there was a degrowth of 18.6%, and year-on-year there was a degrowth of 5.5%. Consolidated headcount is 4,211 as on 31st March 2020. The return on capital employed at consolidated level is 33%, and return on net worth is about 33%. The consolidated DSO, there was a little increase to 50 days in this quarter. For the whole year, the revenue stood at 3,743.3 crores. There is a sequential growth of 26.4%. EBITDA for the whole year is 431.2 crores. There is a sequential growth of year-on-year growth of about 17.9%. The PAT is about 276.9 crores, and the year-on-year growth is about 11.1%. The international IT services, the breakup for quarter 4 is revenue is around 325.5 crores. There is a sequential degrowth of 1.3%, and year-on-year 7% growth. This contributed about 35% of our consolidated revenue. Revenue in USD is $44.4 million for the quarter. There is a degrowth of 5.1%, and on constant currency it is minus 3.9%. The INR degrowth is 1.3% quarter on quarter. The revenue from digital stands at 38%. IP-led revenue have increased to 24.4% of the services revenue. EBITDA for the quarter is 72.3 crores. There is a sequential degrowth of 21.1%, and year-on-year degrowth is about 4.6%. Rupee realization rates are USD 23.9, euros 86.6, and the GBP is 99.4. PAT for the quarter is 45.2 crores. sequential degrowth of 21.8% and year-on-year degrowth of 13.9%. This contributed to 73.2% of consolidated sales. We have added 6 customers during the quarter. International headcount is at 4,066 as on 31st March 2020. The return on capital employed is 35% and return on net worth is 35%. The DSO has changed a little bit to 47 days. And for the financial year, the revenue was 1,272.6 crores. There is a sequential growth of 13.6% and this contributed year-on-year 34% of consolidated revenue. Revenue in USD is 180.8 million for the year. EBITDA for the year is 337.8 crores, which has a year-on-year growth of 15.7%. The PAT for the year is 212.5 crores. There is a year-on-year growth of 4.7%. The domestic business revenue for the quarter is 607 crores. This compared to last quarter, there is a degrowth of 33.4%. EBITDA for the quarter is 23.2 crores. Quarter on quarter, there is a degrowth of 7.9%. Year-on-year, there is a growth of 9.3%. At 16.6 crores, there is a quarter-on-quarter degrowth of 8.2% and year-on-year growth of 28.9%. The domestic business headcount is 145 people as on 31st March 2020. Return on capital employed is 30% and return on net worth is 29%. The domestic DSO increased to 52 days. For the whole year, the revenue from domestic business is 4,492.2 crores. There is a year-on-year growth of 33.8%. This contributed to 66.6% of the consolidated revenue. EBITDA for the year is 95.1 crores. The year-on-year growth is 26.6%. PAT is 64.4 crores. The year-on-year growth is about 39.2%. This contributed PAT to the overall PAT of 23.3%. With this, I conclude my financial update. Hand it over back to the question.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We would also request participants to limit your question to 2 at a time. Should you have a follow-up question, we would request you to rejoin the queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vaidik Sarkar from Unified Capital. Please go ahead.
Hi, morning. Thanks for the opportunity. A couple of questions. Over the last 40-45 days, we've seen how governments, especially in Western Europe, have come and stood behind their local industries, especially in the travel, tourism, and airline market. Putting that in context, over the last 40-45 days, is there any change in your outlook as to how your clients might have ramped up or give you some visibility of ramp up in the times to come in the travel vertical?
Members of the management, can you please confirm?
This is Barry. Was that question clear?
No, can you repeat the question? Can you hear me?
Yeah, I can hear you. Let me repeat the question. My question is to Speaker, over the last 45 days, we've seen how governments in Europe, especially Western Europe, have really come out in support of their domestic travel and tourism and the airlines business, right?
Yeah.
TUI, Lufthansa, all the large travel and airline groups in Europe have got a lot of government goals and support. Keeping that in perspective over the last 45 days, have you seen any change in outlook from your clients? And would you reckon that would reflect on the ramp up in the times to come?
No, I think it's a good question. See, what the governments have done is really supported them to keep the employment on, so that these companies don't do anything drastic with their employees. So obviously, to start operations, you need 3 things. I mean, I don't know, and I'm not an expert, but one is the lockdowns by the respective governments have to be lifted. Today, There's nobody allowing flights to come from any other place to any other place. If you want to send people from Germany to Spain, you can't send them. Secondly, obviously, it's the whole thing about consumer confidence, about wanting to travel, will it be safe, and so on and so forth. So I guess this whole thing is actually just keeping them going. I mean, they're not. When I say keeping them going, means keeping their employees going, not their operations going, because for touring revenue, the business is zero, absolute zero. I mean, so for the business to come back, it's about these three things. One is governments have to open up lockdowns. Second is consumer confidence has to go up a little bit, and hopefully somebody finds a cure or a vaccine or whatever it is to increase the consumer confidence. So these things will define how quickly these businesses will come back and to what scale and size and so on and so forth. But right now it is like they're all being funded to just keep the employment on. I mean, that's where it is.
Sure, that's helpful. And non-travel verticals, especially OPD, I mean, retail unit touched upon, but OPD and others, are you seeing things being neutral, or is there weakness, there as well?
In OPD, depending upon the kind of nature of the business, if you're in a purely application software kind of stuff, obviously that will slow down because most people are just keeping the lights on and rather not going and buying brand new application software licenses kind of stuff. But if you're in the infrastructure space, collaboration space, cloud space, that business is obviously going through the roof. So it's doing extremely well. So we are seeing both. We are seeing, but the impact is not significantly negative. At best, it's neutral to minusly negative to some of the companies we are working with, supremely positive in terms of the business. So retail, as I said, essential retail, fashion, jewelry. These are some of the companies we have had who have obviously both in Europe, Australia, and the US have scaled down some of their work. There are people who are clients of ours who manufacture luxury goods, headphones, hearing aids. They have scaled down a little bit kind of stuff. But we have people in the mortgage industry, utilities industry, who are actually starting new projects. And there are some who are okay and actually investing into new projects. Kind of stuff. We have actually have an exception of a retailer who, for whatever reasons, have had a change in management who want to use this opportunity to put in a brand new system before it opens. But that's a more of an exception than a rule, I guess.
Sure, thanks. Last question before I get back. Would you quantify the fixed cost levers that you touched upon in opening remarks? What kind of levers we might see in H1? And on the dividend basis, I understand it's early days, but would you reckon the board will still maintain 60% dividend payout, or would you be looking at maintaining the dividend per share at an absolute basis?
I think the dividend, we have to look at it from the new rules on dividends. So we might have to find some other means to compensate shareholders. So at this stage, we're not looking at that. I'm thinking it may be a good. Right now, as I said, cash conservation. We want to keep the cash. We don't know where it is already. So we'd rather keep the cash and see what to do with it once we see a reasonable stability outlook to the world economy and where and how the world. As you see, the highest rate of unemployment in the U.S. Is the Great Depression. So we don't know what the implications of all these are on the economy. So I think at this stage we are saying keep the cash and then look at what we want to do with it when we see some stability.
And on the fixed cost part, could you have a guess on how much of a reduction one can expect in, say, H1?
We are working on it. As I said, some is directly on-site cost of risk offshore. We have done some changes to compensation, as I said, some restructuring. We haven't laid off anybody apart from performance reasons. That's about 1 or 2% of the company. Hopefully, we'd like to keep it that way unless we need to take some other action. And of course, as I said, the costs on account of all this work from home and travel and so many other things, we're just getting handled up all this right. So as I said, at the end of first quarter, I think we have a far better handle of how the cost structure is. Practically, I think one should get to a place where one should be able to make the same margin on the revenues we make, kind of stuff. That should be the intent, ideally. And hopefully we'll have a better view of it by the end of Q1.
Ready to squeeze in one last one. I understand.
I'm sorry to interrupt you, Mr. Sarkar. I would request you to rejoin the queue for follow-up questions. We would also request participants to please limit your question to 2 at a time. The next question is from the line of Vimal Gohil from Union Asset Management. Please go ahead.
Yes, sir. Thank you for the opportunity. Sir, I joined the call a bit late. I'm not sure if you've touched upon this, but my first question was on the domestic business. If you could just highlight how are you managing your working capital out there in this times of stress and how that business could get impacted. The second portion of your business is something that you touched upon in the previous question about your OPD business. How much of the OPD business is coming from the new application-based discretionary projects and how much is coming from cloud collaboration, etc.? If you could just answer these 2 questions, please. That's all from my side. Thank you.
All right. Okay. I think the first question I addressed in my saying that the India business is obviously stable because it's licensed business and people have to pay for licenses their boss. They can't stop it, kind of stuff. We said obviously we're all talking about better payment terms and some discounts and so on and so forth. So we're working with our principals and to ensure that we deal with this. So we're working with them collaboratively, and that's why we would see that. And then, as I said, we had this insurance-based credit, so a reasonable proportion of our receivables are insured. So given all this, and as I said, working very closely with our partners and principals, we don't see a challenge on working capital or negative debts or debts going bad. Obviously, we see a shrinkage in business to some extent and its impact on profits, but we don't see any risk as we speak today to the accounts receivable and credit.
Yes, sir. And the second question on OPD?
Oh, sorry. Yeah, I think most of our OPD is really on the either on the sustenance side, management side of operations, and also in the collaboration and cloud side. So it's all you can talk either essential or lights on work, basically.
Fair enough. Great, sir. Thank you and take it. All the best.
Thank you.
Thank you. The next question is from the line of Anubhav Mukherjee from Christian Capital. Please go ahead.
So apart from the large travel client, are you seeing any issue with any of the other top 10 clients?
Not really. As I said, we have seen with some clients in retail and manufacturing and all that, they're not in the top 15, but yeah. We haven't seen any issues. Actually, we have seen some positive movement with some of these clients.
Okay, sir. And in the domestic business, in the past 1.5 months of lockdown, have you seen any spike of bad, percentage of receivables going bad or something like that?
Right. As I just mentioned, we have insurance on our receivables, and we are working with our principals to deal with this in a collaborative fashion, but we don't take all the burden. Whether we are doing work with them on their behalf So if there is something happens, then we share it mutually, or we deal with the problem mutually and together kind of stuff. So to answer your question, we haven't seen anything. Our collections are good. Cash flows as we speak today are better than at the end of the quarter. So I don't see any risk to that. Neither have we seen it in the last 45 days, nor we see it today.
And so last question, if I could. So on the large travel client, as of now, do you have any visibility of the recovery that you can see post like the quarter 2 of this year?
That's what I just answered the person previous. So it's all dependent upon three things. One is the lockdowns, etc., being lifted by the respective governments to allow free movement of people. Two is the consumer confidence that I want to travel, and number three is that these companies have an operating capability to operate. So on the third one, there's no problem because, as I said, they are being funded by the governments and so on and so forth, so they could do that. The first is, your guess is as good as mine when they will allow free travel of people. And second is consumer confidence saying, I really want to do this and take a holiday and do all this kind of stuff. So this is, there will be some amount. It will, for it to get back to 100% of what they were doing would take at least a year, I guess. But even if they come to 30-40%, then there is some amount of work back to be done. Which could be, as I said, our assumption is that it could be 30-40% of the work which is being reviewed. We'll at least get 30% of that back. All this happens. But as I said, there are many variables. So, and even these companies themselves are unsure about, what's going to, when is it all going to change, because most of the decisions are not in their hands.
Okay, thanks. That's all from my side.
Thank you. The next question is from the line of Mohit Jain from Anand Rathi. Please go ahead.
Hi, sir. First is on this, now this is a repetition of the earlier one, but people are talking about this new application development for automatic check-in and things like that, which may start in 2Q if you are planning for a reopening in 3Q. So is there a possibility of you guys getting some new work in second quarter, given that once you will be a steep fall? And second, anything on the order book, order backlog, anything that you could share which gives you some visibility on second half revenue? For any talk
that's what I said.
Intangible it is.
Yeah, that's what I said, that whatever we have, we are seeing the visibility, but very difficult to predict how people are going to behave because everybody is taking it almost a day at a time kind of stuff. So I think one needs to see how the situation evolves. If you see, that is on the future. If you see our interest, we are having more conversations today than before, but we don't know when these will materialize into anything meaningful, reasonable. That's what I was telling our team, that I've seen more conversations opened up in the last 2 or 3 weeks than before. But these are all about conversations. They are not about saying, I want to stop tomorrow morning. It's all about, I want to do this kind of stuff. So that, if things move for the better and everybody's view of the future is better, then I guess, one can see a lot more action in this. But it's all about, as I said, business confidence, consumer confidence, ability to invest, and so on and so forth.
And sir, as a follow-up now, our client Microsoft and related technologies are seeing significant growth as per your PPT also for Sonata. So is there a possibility of, for example, travel stays, let's say 15% lower from 1Q? Is there a possibility of deploying people and hence margins to return back to some level in second half, even if travel continues to be weak?
Yeah, if you deploy the people, obviously people are not fungible. I think we need to know that. You can just take a travel person and put them into a OPD project kind of stuff. So there are plans to do that and deploy these people into opportunities which will come up, retraining and reskilling people. That's going on as we speak. Yeah, I mean, if, as I said, if there is significant growth in non-travel, non-retail businesses, these people can be deployed.
But OPD, you don't sound that optimistic in the previous questions, because I thought, given that our alignment is towards Microsoft, our growth rate in OPD should significantly offset, or at least partly offset decline in travel.
Yeah, but it can't offset 20%.
Okay. Anything
of the company's revenue. That means my OPD business has to go 100%.
Not even 100%, but at least it will be like 15 or
20%, so that will make up, one-fourth of the business loss. So that's why we are, otherwise we should be in a much different situation if these growth were not there, kind of stuff.
Okay, one for Jagan,
100% growth is all I'm trying to say.
No, understood. One for Jagan, sir, what margin levels you are looking at after these pay cuts and all the corrective measures that you have announced? Is it likely that you will go back to, let's say, 8-9% consolidated margin in second half, or do you think it will remain low for most of FY21?
Yeah, that's what I said. We are trying to do this analysis, and I will have a better visibility on this at the end of Q1.
Okay.
Yeah, we are doing all this analysis. We'll have a much better view of this on Q1. A little premature right now to say, what will it be in Q4.
So your guidance on up to 40% drop stays for first half?
Yes, actually a little bit more because of this whole, we thought that some cost structures could be rationalized by people coming back. That was delayed. So in the first quarter, it could be a little bit more, and then second quarter, that's one figure looks reasonable. Yeah.
Thank you. I would request Mr. Jain to rejoin the queue for follow-up questions. Also, since we have many participants waiting in the question queue, I would request you to please limit your question to one at a time and request you to rejoin the queue for follow-up questions. Thank you. The next question is from the line of Vipul Shah from Sumangal Investment. Please go ahead.
Hi, sir. Can you give more details about that ILSS write-off? I think I have read it first and I don't think it was mentioned in any earlier quarter. So can you give more?
It's in our Provident Fund accounts. There was an exposure to ILSS. And obviously based on the advice which was being given by our advisors and consultants, and the evolution of this whole ILSS saga with the government-appointed board, liquidation of assets, distribution of the proceeds, and then there was this whole thing that government may say that the PF people should be paid first and all that. So we were prudently and conservatively taking small bites and providing for it, and that's why, because it was not material, we didn't disclose it, and still waiting for proper resolution of it, so we were providing maybe 2-3 crores a quarter or whatever it was. So it wasn't material, it didn't affect anything, so we said, so we were told that we don't have to explicitly disclose it, so we didn't. But now given the current situation and all that, we have been told it's a lot more prudent, given this situation, resolution of this kind of a thing, obviously it's going to be really more. So we have provided for it, and obviously you have to know, because it's material, we're going to show it separately in our financials. So that's the only reason you didn't see it, because we were providing small bites of it, didn't think that we thought that it may come back, and all that kind of stuff. But now I think, given this, I think we have taken a decision to provide for it shortly. And as I said, and it's a lot of material, we disclose it.
So what is the total figure for FY20?
I think, I don't know, somebody finance can answer that question.
Yeah.
And, sorry?
For this quarter, we have provided around 12.1.
No, the total amount so far is provided to the person.
Yeah, it is somewhere around 26 crores.
So will it come again in current year also, or this is one off?
It's done. It's a one time.
Done. That's it. Done and done.
And sir, lastly, Shikhar sir, can you comment on ramp down and cancellation of the projects by clients due to COVID?
I commented on it, saying that I did comment on it, saying depending upon what industry, what kind of project, they have been ramped down, they have been ramped up. I talked about, one of our large clients ramping down very significantly. And depending on kind of work and industry you are in, they have been ramped down. And I touched upon it and the impact on revenues also. I did do that.
Okay. Thank you, sir.
Yeah.
Thank you. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Thank you, sir, for taking my question. So, on your travel space, if you can give some more color, operationally, what are we doing right now compared to what we were doing pre-COVID? How are we billing the clients? Are we getting the payments? To what extent the ramp down has been? So if you can throw some more color on what work is being done on that side.
So as I said, our largest client, we've had, I think, almost at about 15, 18, 20% of our revenues. It ramped down by about 85%. And continuing 15% lights on kind of work, keeping the systems on so that they can take cancellations and refunds and still keep the booking open, hoping that somebody will book holidays and so on, or visibility, website search, analytics, and so on and so forth. So basically, really essential work. And then we have another airline client, similarly, have ramped down on new projects and continuing with maintenance and of their existing financial systems, retail systems, and so on and so forth. There are a couple of other clients in the travel who are using our IT. They obviously are using it because they're in the real reservation space and they continue to use it. And so because even if one person travels, they need the system to be operational. So we are seeing that. So that's the we are not seeing any payment problems with any of these clients as we speak.
Understood. And on the domestic side now, there are certain, all these movement towards digitalization, work from home should possibly mean, higher spends on IT as well as enterprise software side. Even for Microsoft, for example, I think Teams is sort of becoming very popular amongst many corporates. I was seeing the chart about how they are growing versus Slack. So are we also participating in this sort of, journey wherein a lot of, software is being sold, which will enable people to, work from home and other things, a push towards digital, etc.?
Yeah, it's a valid question. I think we are participating. We are the largest partner for Microsoft in India by a huge margin. But these clients have already have bought these licenses. It's not that they never had these. And the only thing they're using it a lot more, so probably lead to more consumption and consumption-related revenues. But everybody had a license. It's just that people are using it. And those people, I don't want to comment, people are using it, are not using it, but paying for it. So I guess somehow we need to find out how to get them to pay for it. But otherwise, the large majority of the large corporates have already signed on to these things and are using these tools kind of stuff. So, as I said, counter also is that they may say, reduce my bill of material for some other tool and, move it to Teams and so on and so forth. These are the discussions and negotiations which are going on.
Thank you. I would request Mr. Gupta to rejoin the queue for follow-up questions. The next question is from the line of Amit Chandra from HDFC Securities. Please go ahead.
Yes, sir. Thanks for the opportunity. So my question is related to travel vertical. So as you said that the impact on the travel vertical is mostly from one large client. So if I do my calculations, then the impact on the revenue from this large client is to the extent of around 60 to 70%. So is it correct, the calculation? And also, as the impact is pretty significant, so what proportion of the revenue do you expect to come back in the second half?
That's what I said, Amit, that when if things come back to normal, we have modeled about 30 to 40% to come back.
Okay.
If things are okay. For fully to come back, I would see more like 12 to 18 months.
Okay. And sir, and the second question is on the total number of clients. So we have seen sharp fall in the total number of clients in this quarter, largely in the ANZ region. So can you please explain what was the reason for the fall in the total number?
Yeah, I think maybe the thing didn't disclose it. What I told them is to remove the clients of doing less than like $50,000 a year kind of stuff, or the list of clients. So we just were doing an unnecessarily bloated list. And so these could be people who are paying some maintenance and license fee for ANZ, for Microsoft, client licenses, and so on and so forth. So we said take them all out and at least let's see a correct picture of what the active clients need. Those clients are still there; they're not gone.
Okay. So in terms of the revenue, there is no impact from the fall in the number.
They're extremely small, and they're there. The revenue is also there, but they're like really, as I said, less than $50,000 a year.
Okay. And sir, and the last question, in terms of the FTEs of the total number of FTEs that we have, what will be the exposure of FTEs towards the travel clients? If you can give some numbers.
Yeah, the FTEs was about 500 people, I think.
Okay. Okay. Thank you.
Thank you. The next question is from the line of Sriram Srinivasan from Shema Management. Please go ahead.
Actually, we have been concentrated on wherever the opportunities are finding, and over the period we have been going very well on inorganic basis by through additions. And even as examples, our scalable and softwares have now been productive in these down scenarios. Is there any way that we are almost holding 315 crores of cash? Is there any way that we are finding any opportunities in any other sectors like in this COVID-19 scenarios? For example, diversifying our client base even in edutech or pharma or cloud-based services? Because I also, Sonata has been done very well in the last 2 to 2.5 years. We have done lots of mergers and acquisitions, and we have been focused on doing wherever we are finding the best opportunities. That's what I'm asking.
Yeah, it's a good question. I think there's a lot of opportunity at the end of it. So we're not going to rush into it in this current situation because we don't know what the visibility will be like. But I think there'll be a lot of opportunity for some good strategic actions when things settle down, and we are looking at it very closely in terms of what are the opportunities which will come our way, and we are looking at it. Yeah, thank you. So quickly on time check, I think we've passed the time. Maybe, I don't know, last 3 questions, and then we hopefully can run down if it's okay with everybody.
Yeah. One more last question, sir. So, is there any contraction that we are looking so far in the domestic side in terms of accounts? Because I know that it is in a very uncertain period and it is very tough to comment on this. But over the period, in terms of retaining the margins, even I heard that earlier that you have stated that in the top management there will be a reduction in the salaries and kind of things. Is there any contraction that we can expect in upcoming quarters in your accounts?
No, sorry, I didn't understand. What was the question?
Is there any cut down in the accounts over the period of time?
No, I said we didn't. We are not looking at it right now. We looked at only a restructuring of compensation, and we are not looking any drastic headcount reduction measures at this stage, no.
Over a period, we have been looking for any hikes over a period, or we are deferring the incrementals to the employees?
No, we are not looking at any increments at this stage. We must have some very creative variable structures incentivized to drive growth, but we're definitely not looking at any competition.
Okay.
Thank you. I would request Srinivasan to rejoin the queue. And we'll take one
last three questions. Is that okay with everybody? Because we're beyond time.
Sure, sir. We'll take one last question from the line of Vinod Makaria, an individual investor. Please go ahead.
Good afternoon. So my question is, Mr. Trump has been hitting the headlines with, all the proposed restrictions on H-1B renewals and all. So how many people do we have on H-1B working in US?
As I've told many times, we are not a very heavily H-1B dependent company because of our acquisitions and other things. We've had a fair amount of local people. So this is something which is not going to affect us.
Okay.
Yeah.
Okay. Yeah. Thank you. Thank you so much.
Yeah.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to the management for closing comments.
Right. Yeah. Thank you, everybody. Thank you for joining us. And obviously, we wish we could have had this call in better times. But I think we all have to go through this, and at least myself and the team at Sonata are really confident that I think we have a good model, and we have taken all appropriate actions to come out of this more strongly than before. So thank you all for your time today.
Thank you. On behalf of Sonata Software Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.